Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's talk about what is happening with Tesla stock, what we can expect moving forward, and all of that good stuff as per usual. So also, as per usual, if you enjoyed the video, please don't forget to hit that like button because, well, not because, but this is not financial advice and I am not a financial advisor. And of course, if you enjoy my analysis and you want it daily, but like live as the market is trading, I do share my thoughts every single day the market is trading throughout the trading day. Yeah, every day. So definitely check it out for just $3 a month, right? You get access to all my Tesla thoughts. And sometimes I share other stocks as well. Like today I shared Google and XOM, which is ExxonMobil. Anyway, for $5 a month, you can also get access to all of that, plus NVIDIA daily updates. But let's just jump into it. Tesla closing the day with down actually ever so slightly, down almost a percentile, we'll just say, closing at just shy of $219 per share and a little bit down further in aftermarket, but not by a whole lot. Compared to the market itself, though, Tesla definitely with a bit of an underperformance. Once again, as if it's just, anything unusual at this point. It's just kind of another day. So what does this mean for Tesla moving forward, right? Is this good? Is this bad? So let's talk about it. Why is even Tesla down today, right? Why is it down? We were kind of slowly trending upwards. Why is it down? Well, this is where the 1 hour comes into play. We did end up getting a gap down pre-market. So if I go over to pre-market, you can see we did end up getting a gap down pre-market. Tesla did sell off. And then unfortunately, the move back up before market open, and even honestly, as the market opened, wasn't enough. But the issue that this essentially created is this gap down created two issues. The first issue is, remember how I was saying how we have this potential bullish rising triangle, right? As long as we, of course, maintain the rising triangle. Well, we didn't maintain it, right? And not only did we not maintain it, but this gap down ended up breaking below the rising triangle. We came up to it pretty much within the first hour, you can see here, came up to it, retested it successfully, which is obviously a bearish thing. And we ended up moving down even further, pretty much right down to about that 215, 216-ish range. Like I said, has to hold, but it did. So that's a bullish sign, right? So we'll get into the bullish signs soon. Let's talk about the bearish signs because I already kind of started with the bearish things. So that's not good, right? The fact that we lost this rising triangle and we broke down below, retested it successfully and continued further down essentially, right? Which looks similar to on the 15-minute chart, you can see, right? That's not good, right? That definitely shows some weakness. And the second thing that I don't like about this is the fact that, despite us breaking down below, we technically didn't actually fill the gap. We still have a bit of a gap fill over here. So we came pretty close to it. But in my opinion, I only view a true gap fill as if we literally fill the gap. A lot of people view it as a wick to wick action, but which sounds kind of weird, but I view it as personally, you have to get to the gap. Like you have to fill the gap, right? Where do we close, right? What price did we close at on Friday, right? We closed at 220.72, right? That was this final hour closed. And what price did we get to the highest today in the first hour? 220.48, right? So we're off about, 30-ish or so cents. So to me, the gap is not filled, right? I don't view this as a gap fill. I view this still technically as this is a small little gap over here to fill. Now, why am I bringing this up? Why am I putting attention on this gap fill? Well, like I said many times, whenever you have a gap down or a gap up, the ideal scenario, so let's say a gap up is bullish, right? The ideal scenario is you don't just come back and fill the gap and then maybe move up later, or the flip side, right? And the reason is because it creates a more bullish or a more bearish move, respectively, of course. So in this case, because we had a gap down and we couldn't even come up to actually truly properly fill it, that to me shows a little bit more bearishness, right? That shows me a little bit more potential issues. So I want to remove this rising triangle now because this officially pattern doesn't matter anymore. Same idea with this, right? How we had this massive gap down. And the issue with this is the fact that we spent a whole, honestly, even more than a week at this point, just going sideways. Like the fact that we're going sideways, I guess, is a decent sign, but you have to think about the psychology behind it, right? We had a massive gap down. We're going sideways for a week. What does that actually mean though, right? It means the fact that people are not only, they're kind of willing to buy here, but people are willing to sell all the way here. So despite us dropping 8%, we're still not really having the buyers overwhelm the sellers, right? Which is a little bit concerning. You would think after a drop like this, the buyers will overwhelm the sellers, right? At the very least, we'll come up to maybe get the gap fill and then maybe move back down, but we couldn't even go up to fill the gap, right? Which is bearish, right? That's not a good sign. Now, obviously earnings is around the corner. This definitely can change things quite a bit, but strictly off of what we see today and strictly off of that technical analysis as it looks right now, right? That's not ideal, right? That's not what you want to be seeing, right? The flip side, of course, is, when Google had its gap ups, right? You can see how Google, constant gap ups, right? Like, again, I bring this up every time, but this is just the best example I can think of on the reverse side. you know, gap up here, gap up here, gap up here. And obviously it did fill this one back here, but you know, it still has these 3 gaps down here that it's clearly not filling, right? And it's not even showing signs that it wants to fill potentially. Like maybe worst case scenario will come back down and fill 1 or 2 more potentially. But you know, the fact that it's hovering all the way up here with these gaps just left unchanged, it's a bullish sign, right? That's a bullish sign. Like that to me tells me that this impulsive move up was a true bullish impulsive move up. And unfortunately, the opposite, you know, can be true for Tesla here with this massive gap down. So this is kind of the psychological aspect of it that you want to consider. Now, again, like I said, earnings is around the corner. That absolutely can change things. And I'll go over what I think the rough price targets I have are if earnings are good or if they are bad. I'll go over that in just a second here. But that's just kind of the idea behind that. Now, that's bearish thing number one. Obviously, the other bearish aspect, the fact that, you know, well, we're still pretty much in this descending channel, right? We can't even break above like the low to mid 220s. You know, we have the market bias, which is essentially, think of this as a 21 EMA, just a little bit more. It's almost like the modern 21 EMA, at least in my settings, you know, and it's obviously acting as a resistance, right? You know, you can see as I zoom out over here, you know, ever since we broke down and had this initial gap down, which again, same idea. We had this gap down over here, couldn't even come up to fill it. Like we couldn't even make our way back up to fill it. And then what happened? We just slowly bled into another gap down. And now we're kind of rinsing and repeating. Gap down, sideways, gap down, sideways, gap down, right? Earnings, gap down, potentially. You know, that is a possibility here. So this is why, you know, these gap downs with no sign of moving back up to fill them, at least, you know, it's a little bit concerning, right? And again, it already happened here. It's literally the exact same thing. So just keep that in mind. That's important to understand, that there is still a lot of bearish momentum on Tesla. And again, the market bias on the 1 hour, you can see, you know, after that gap down, it obviously turned red, and it's been pretty much resisting us every single time. Like every time we come up to it, it's been resisting us. Did it actually just last week? I think this was what, on Friday, resisted us as well. We had that gap down. You know, and at the moment, it's obviously going to be continuing to act as a resistance, which at the moment is sitting around the mid to low 220s, like even 223, honestly. A break of that can potentially show some signs, because that could also mean the fact that we're breaking out of this descending wedge or channel. So I don't know. That's just kind of the bearish aspect, right? There's a lot of bearishness on Tesla here. Like the trend is still bearish. It's just, it doesn't look good, right? Go to the daily chart and, you know, it's really no different, right? The market bias, obviously, you know, also I filtered it a bit. So it's a little bit more, it'll give less false signals. Obviously red, right? It's obviously showing red momentum. You know, it's just, it's bearish. Like Tesla's bearish. There's no question about it. The only question here is just like, are we close to the bottom, right? And, you know, my indicators are showcasing that we're close to it. They're not really telling me that we're there yet, though. That's the thing. But it is telling me that, you know, maybe we're, you know, we can kind of see the light at the end of the tunnel, but, you know, there could be some, you know, steps left before we reach that end of the tunnel, unfortunately. And earnings can be that, you know, deciding factor. So let's talk about the bullish aspects, right? Obviously, the bullish aspects is breaking out of this descending channel, which honestly, even as early as tomorrow, even like above like 222, 223, can be potentially enough to finally break out of this descending channel, right? That's something that you definitely want to watch out for, and a return back to flipping this market bias back to being bullish. So those are the things you probably want to watch out for, honestly, even as early as tomorrow to Wednesday, right? The next 2 days pretty much leading up into earnings. Breaking out of these things can be a pretty good sign, but obviously with earnings, you know, and Tesla, I think the implied move for Tesla on earnings, let me see if I can open up this, I think it's this one, should be, I think it's like 6 to 7%, if I'm not mistaken. Hopefully this tells me, yeah, this does tell me. Yeah, about 6.5% you can see is the implied movement, which is about 232 to about 205, which actually, coincidentally enough, is pretty much the exact price targets I have for Tesla if earnings equals bad or earnings equals good. So let's talk about that next, right? Because ultimately that's what it's probably going to come down to. Let's talk about if earnings equals good. Let's say earnings happens to be not too bad, right? Maybe it's, you know, good enough for the market for whatever reason, right? And the Tesla stock ends up reacting positively to it. Great. What does that mean for Tesla stock? Well, that means that we most likely make our way back up, in my opinion, to about the mid to low 230s, which will most likely act as a massive resistance, which will come into the daily market bias as most likely resistance. And then we can break out of this descending channel. But the issue there is the fact that I do expect potential rejection. Like I still potentially, you know, expect that, you know, we come up here assuming earnings is good, and we ultimately can still potentially reject. And honestly, we can still definitely make our way back down like this. Like that can still absolutely happen. So watch out for that. That's still a, you know, a concern, because despite a gap up post earnings to 230s, if it happens, you know, we're still technically, you know, a little bit of a concerning, you know, bearish trend here, because, you know, the market bias will still be red, right? So we definitely want to break above that. And in my opinion, I honestly still think Tesla has a higher chance going to 170 until unless rather it breaks above about 260 to 265, ideally 270, but like that 260s region, like that really needs to break, right? Like we need to break out of this region up here for Tesla to really start getting more bullish, right? Which, you know, it can happen. Like this earnings could be that catalyst. Like we could come up to the 230s, maybe get a small rejection, maybe make our way back down here one more time, find support, and then blast our way up. Like that's also a possibility. So we'll have to see how earnings reacts. But if earnings is not good, or, you know, whatever, the stock for whatever reason decides to sell off even further, which at the moment seems to be the likely case, only because strictly off technical analysis, again, we keep gapping down and we're showing absolutely no strength whatsoever to get even remotely close to gap filling up higher. Even this morning's gap fill is the same thing. Again, same idea, gap down. You know, we kind of showed some strength, but, you know, it's just another rejection once again. And don't forget, I want to make one more thing clear. You know, we spent almost all of last week consolidating here, but what price last week that we spent, you know, the majority of it consolidating sideways, what price was just consistent support, right? What price just kept acting as a support for us over and over and over, right? 220, right? About 220, right? Give or take 219, 220, 221, something like that, right? Around that range. You can see all these wicks down here, right? Constantly acting as a support over and over and over, literally the whole week, like quite literally the whole week, like literally from Monday, the whole week, it's been acting as a support. This gap down, unfortunately, you know, based on at least today's price action this morning, you know, it can take this area that was obviously support and they could potentially turn it back into resistance, which is why it's another big reason for me that Tesla needs to really recapture this low 220s region and at the very least turn it back into support once again. You know, and the threshold to break out of this downward channel, you know, will be lower, luckily, I guess, for the bulls potentially. So yeah, there's a lot of conflicting things here. Again, it still leans bearish. That hasn't changed once at all, right? We have a potential, you know, volume profile you can see here, massive volume profile, but it's unfortunate we're kind of below it now. So, you know, that could be a little bit concerning as well. So, you know, I am seeing signs that we're close-ish to a bottom, but like not really signs that we're at the bottom. And based on the, you know, weakness that I'm still seeing, in my opinion, again, there is a more likely chance that we, you know, move down to about that 207, 205-ish region post earnings. And there, I think we'll find a temporary bottom. I think there we'll find that temporary bottom. I think there we'll, you know, get a rally back up. And then I think we'll reject and make our way down lower, back to the ultimate bottom where I think it'll be around 170s, 180s, maybe even 160s, somewhere around that region. But that's just kind of what I'm thinking right now moving forward, right? I mean, you know, it is what it is. I'm sure it's not the news people want to hear, but you know, it is what it is. Now, again, I want to make it clear, you know, earnings, you know, it is, of course, a wild card, right? Things can go, you know, any direction, to be completely honest with you. So watch out for the earnings, right? You know, it's definitely a wild card. But like I give you my targets, good earnings, I see 230s. I do see 230s. Bad earnings, 205, 207, 202, somewhere around there. And that's pretty much all she wrote, right? That's all she wrote. It really just comes down to that. Let's see how it plays out. But again, if we're just looking strictly at the technical analysis, strictly at the, you know, TA, you know, it does lean a little bit bearish in my opinion. But I do think that if we come down to 202, 203, 204, 205, somewhere around that very low 200s region, I do think we'll find a bottom there temporarily. I'd be pretty surprised if we don't. I'd be like quite surprised if we just crash all the way down here like this week or something like that. Like that'd be kind of nice to just rip off the band-aid, I'll be honest, but it's too easy. Like it feels too easy for that to happen. So my bearish scenario, again, move down here, retest, and then move lower. That's kind of my, you know, base case scenario. That's obviously a bearish scenario. And my bullish, my short-term bullish to longer-term bearish scenario is a move back up to the 30s from earnings, retest market bias, and then ultimately crash back down regardless. But my bullish scenario would be the fact that we ultimately do this, come back down, retest that support once again, and ultimately make our way back up to the top of this potential wedge here. Yeah, that's another thing to consider as well. But yeah, it really just comes down to earnings. Let's see how it plays out. Let's see what happens. You know, if history is anything, you know, any what's the word I'm looking for? If history is any indicator, I guess, yeah, Tesla usually sells off post events and earnings. Not always, of course, but more often than not. So let's see how it goes. But thank you all so much for watching. See you for the next one. Peace.